Hey, you know I've been telling you to buy Facebook for a long time right now, okay? So don't be shocked that we're going to talk about these earnings, where it's up 6.5% after hours. It right around the $250 range, which I got to be honest is pretty exciting. 52-week high for it. The stock just seems like a dog sometimes. I swear it just doesn't move past certain levels. Market cap never beats the 600 billion mark usually. Never close to 700, but after today, maybe we see it. I'm excited to see. So overall, you see stock up 6.5%. Year to date, the stock isn't actually that high. It's only up 11.78% in an environment in which this stock benefits most. So considering obviously pandemic environment, people are using online and .com more than ever. And I think a lot of the issue with this stock and why it's not up higher year to date, sorry I'm moving around a lot, but, is because there's fear of ad boycotts, whatever it might be. So the question is, can they beat during these ad boycotts? And let me just tell you, all of you people just trying to sell the fake news of ad boycotts, you can shove it. So Facebook GAAP EPS of $1.80 beats by 40 cents. Juicy. Revenue of $18.69 billion, up 10.7% year over year, beat by $1.3 billion. Not only are you beaten on revenue, you're beat by $1 billion. That's what I call incredible. And we'll get into daily active users. They beat on daily active and monthly active users. We'll look at that in the slides because I love Facebook because they give me a slides. They give me a little PowerPoint to look at so I can feel like a little baby and I can read on them, okay? We like pictures and charts, you know? We love pictures and charts here because you can't misread it, okay? I'm not getting this fake news, people. Facebook is up after easily clearing expectations. Revenues rose 11%. And here's a line I want to show you so I can kind of just give you a little smack across the cheeks. Ad revenues rose 10%. That's right, ad revenues rose. And obviously this is a nightmare of a quarter for ad rates, right? It is. And I don't think anyone can contest that. Look at Twitter's earnings, right? Company got shellacked. But it's Facebook. So their ad revenues are actually rising. Because as many companies want to stay quote-unquote woke for their audience, Facebook is still the place to put your ads. It's a growing platform and it is the biggest social media platform out there. With Facebook and Instagram combined, it is a beast, and people need to be putting their ad dollars to this beast. You have to. It's just where the money's at. Operating income jumped 29%. That's right, operating income jumped 29% to $5.96 billion. Talk about printing money. And amid a sharply lower effective tax rate, that's right, tax rate was only 16% somehow. I don't know how to do that. Net income doubled to $5.18 billion. So the company made $18 billion in revenue, but brought in $5 billion in profit. Now that is what I would find as incredible. So, just as a comparison here, Amazon does $90 billion. They bring home $5 billion this quarter. Facebook brings home $18 billion, or has $18 billion of revenue, still brings up $5 billion. Oh my gosh, this company prints money because they found the solution, right? They've got the money printer in the basement. Zuckerberg's printing the money from his mouth. His eyes glow up probably, and the money just starts flowing out. I can tell you right now. That's how he gets that money. Daily active users up 12% is massive. Monthly active users up 12% also. Family daily active people were up 15%. Family monthly active people up 14%. Whew. Average revenue per user was $7.05 versus the expected $6.63. I mean, they beat on every aspect of this thing. It expects Q3 ad growth roughly in line with Q2's rate of 10%. So even through all of this, where companies are saying they're not going to be spending their ads on there, Facebook just says, I'm going to get the money anyways, right? Someone's going to be advertising on my platform because some people have a smart marketing department and they realize it's the best way to reach out. Not everyone's got a smart marketing department, sorry, but if you need one, just holler at me. I mean, I'll put in the application wherever you need me to do, but my resume is ready for it. Capex for the year will be on the higher side of the range at about 16 billion versus a previous range of 14 to 16 billion. So let's look at these freaking slides. Zoom in just a wee bit for you, right? And they love to hit us with a little bit of daily active users first. So that's awesome. What do we have for daily active users? We scroll down and see the chart, okay? And this is where you see, gives me since Q2 of 2018. People say Facebook, the platform's dying, right? The platform's dying. No, right? It's not a dying platform. In fact, you've seen actual annualized growth rate rise, in fact. So you've seen a big jump in the past 2 quarters, actually, in terms of users of the platform, which is a very promising sign. Very promising sign. For sure. And you see the same in terms of monthly active users. This quarter was a smasher of a quarter, by the way. Just an absolute smasher. As far as average revenue per users, I do want to mention too, it's every segment of the world, by the way, just in case you were curious. Rest of the world, Asia Pacific, Europe, and US and Canada, that's right. Smasher everywhere. Average revenue per user, you did see a little bit of a decline from Q4. That's where most of the ad spend comes in, though, so that's why Q4 is such a big time for them as far as average revenue per user. So definitely needs to be mentioned there, and that's really all from ads. So again, more ads get spent in Q4, so that's why you see a little bit of a, we're not quite where we need to be compared to some of the previous quarters. Not a shocker. Family daily active people saw a big increase this quarter as well. Family average revenue per user, or per person, I should say. You see that one. Overall, against Q2 of last year, a little bit lower, but again, not really anything to be concerned about. Revenue, just a consistent path of growth here. I mean, Q4, again, advertising revenue is the most important for them. That's where they get the vast majority of their money. We're talking 90% of the revenue. You see a consistent growth story here. I mean, this is only over a 2-year period, increasing from 13 billion to 18 billion. That's what I call money in the bank. And trust me, I like money in the bank. Not just the wrestling, okay? Now, we can talk about the wrestling all we want, but we love wrestling. We love wrestling. Just kidding. So after this, sorry, this is wild. My mind's blown. Advertising revenue by geography, and it's not a number you saw decrease, right? Quarter over quarter, you saw an increase. Year over year, you saw an increase. So ad revenue it's still hitting for them. It's still hitting. Other revenue, not quite as important. I mean, I got to be honest. Other revenue being companies they own like Oculus and the like. Still good amounts of money, but not quite as much as, some of the other amounts of money. Income from operations, really hard to compare Q1 of 2019 and Q2 of 2019 because they had a lot of legal expenses due to the Cambridge Analytica scandal. But money is being printed. Okay, it's better to compare it to Q2 of 2018, in which they did rise a little bit, but money's being printed, and I love it. Effective tax rate was definitely pretty light, but it's always floats around that. Net income rose year over year. Beautiful. EPS, that's right, rose year over year. Beautiful. Just makes me happy. Capital expenditures, obviously you see an increase from 2018 to 2019, but overall, year over year, we actually saw a decrease in this quarter. So nothing too insane there. I think there is no balance sheet there. So we're going to look at the earnings release and get excited. Get hype, baby. Here's this balance sheet. We're going to zoom in just a little bit for you. Now, this is a company that does it right, Facebook. Come on now. Everyone knows your current year goes on the left, right? Current quarter is on the left. Cash and cash equivalents of $21 billion versus $19 billion of last year is quality. Total current assets, you see $68 billion. By the way, that is what I call current assets. Oh, baby, that's beautiful. That's pure money. Pure money. Total assets in general of $139.6 billion. Oh gosh, versus $133.3 of a year, 6 months ago. Slight increase, nothing massive, but I do want to see if what this liabilities things hold for me. What does liabilities hold for me? Did they increase that as well? Well, guess what? No. Total liabilities of 29.24 compares to 32. Compares to 32 of 6 months ago. So in this quarter where everyone's increasing liabilities, they managed to decrease liabilities. I don't know about you, but I find that pretty incredible. Total stockholder equity has increased to $110 billion versus $101 billion. This is a company's balance sheet that is, this is one of the best balance sheets you'll ever see. I hate, to be that guy, but it absolutely is. Only $30 billion in debt, but $140 billion in assets. That is incredible. To see stockholder equity that high, it's rare to find. Okay, guys? That's why even at these levels, I still like Facebook, right? PE ratio is actually only around 30 at this point. Forward PE is a little bit under. I love Facebook at these levels. I really do. And I think it's justified for the valuation because they continue to grow revenue at rapid rates. They continue to grow earnings at rapid rates. They continue to do everything at rapid rates. It hurt me. I'm proud of Facebook. What do you want me to say? I'm proud of Facebook. Oh, gosh, I love it.